Okay, so I wanted to talk about the presentation the Chancellor did a week ago at the time I recorded this at Mansion House. Um, I'll leave a link to the presentation below. I won't be watching it during this stream here or this video here, simply because it's about 45 minutes. And if I was to break it down and comment it on that way, on that basis, we would be here for quite some time. So I just wanted to sort of share my initial thoughts around what was discussed, my feelings. Um, but yeah, as I say, it was interesting. She seemed a lot perkier, a lot happier compared to what we saw when she was crying during Prime Minister's questions. Um, I guess she's had reassurance around her position, which is good for her at least. And as I say, she's come out in this presentation, after a year in office, you know, basically given herself a wonderful self-appraisal. So, as I say, you can sort of make your own assessments about how you think the Labour government and the Chancellor are doing. Um, but yeah, as I say, I just want to talk about some of the things she mentioned during this presentation and just to sort of give you my thoughts. So, one of the things she talked about was the introduction or the digitalization of stocks and shares, and also a stable coin. And I think this is a good thing because it does acknowledge that crypto technology is technology, right? Um, and if you use it in the right way and if you view it as a technology, um, it does have validity, right? It does have utility. So although in the news there's been a lot of bad press about a number of dubious projects, um, I think the key thing to consider here is that it's like with anything, right? So any business, any opportunity, any technology, it can fail. It can be it can be a scam. These things have always existed, right? As long as there's people, there's always people that can be dishonest and do the wrong thing. And I think crypto is the same. It has a lot of potential. It hasn't realized that potential. I think that's a fair criticism. But equally, um, it does also provide opportunities to do the wrong thing as well. But that's more around the individuals more so than the technology, I would say. So as I say, I think it's a good thing. I think it opens up a lot of opportunity. I think it's a good signal for those that are bullish around crypto. Um, and I think one has to also consider the potential opportunities for the government because if crypto technology and blockchain technology more widely becomes more adopted, then it does allow them then to really think about opportunities around tax receipts because blockchain transactions, whatever they are, and again, these if you digitalize real world assets, which is what we're talking about here, and put them on the blockchain, then they're highly visible. They're not anonymous, despite what people think. Um, and when you onboard and offboard, so when you basically want to do any crypto transactions, typically you have to give KYC information and you have to go through AML checks. So these are anti-money laundering checks, which you should be familiar with in terms of any banking products you want to buy or obtain, and know your client checks. So again, the provider needs to know who you are essentially. So if all of this is tied to blockchain transactions and anybody can see those transactions, then also the government can. And there is legislation, all sorts of legislation actually, that means a lot of this needs to be reported to governments. And one in particular is the CARF. Um, I can't remember exactly what it stands for. I think it's the Crypto Asset Reporting Framework. I could be wrong, so double check that. And it's part of a wider OECD initiative to basically ensure that there isn't tax evasion. So it's specifically around tax, essentially. So this is something else that needs to be considered. So overall, I think it's a good thing that they are embracing technology. I think they're sort of lagging behind the likes of America and the United Arab Emirates. I think they have been more bullish, and I think because of that, they've seen more startups, more spin-offs, more projects, which has been to the detriment of the UK and Europe, I would say. Um, but as I say, I think governments are also realizing that they're leaving a lot of money on the table with respect to tax if they don't also embrace these things. So I think all around it's good. And if it means there's going to be more tax receipts, based on people making more money, I think that's okay. So I think that's good. The other thing I wanted to pick up on was around the fact that she mentioned some banking reforms, with the idea being that it would help people get on the property ladder. That was specifically the one benefit she talked about here. And on the face of it, it should be a good thing. So, if you are lowering the lending criteria in terms of the deposit that is needed, you're providing guarantees to banks. So again, they're not assuming too much risk. I mean, the taxpayer would be in that regard, but the bank isn't. So it depends how you view that, I suppose. Um, then that is a good thing, in the sense that somebody can get on the property ladder sooner because the deposit that's needed is less, so it doesn't take as long to save. And then they can then get a mortgage that either is a bit longer because they're younger, or they can hope to pay off that mortgage a lot sooner, well before they've retired, which is obviously going to be one of people's aims in life if they want to own a home. So I think on the face of it, that's a good thing. And the other thing she mentioned is that because banks don't have to have as much collateral, um, they can basically take a more they can lend and adopt more risk by doing so. And what I mean by this is that if previously you had to have a pound to lend out £10, if you lower the collateral requirements, then you can, let's say, lend out £15 whilst only holding £1. Um, Obviously, that increases the risk of defaults, but overall, you're selling more product. You're selling more borrowing products, i.e., you're selling more mortgages in this example. So the bank has an opportunity to make more money, and those that work for a bank obviously have an opportunity to become even wealthier. So that's also something to consider. And again, that's not necessarily a criticism or a bad thing. It's just something to also acknowledge. And I think the other thing I would also acknowledge, I would say, and I think is relevant, is that the bank, because it has more mortgages, it can sell more mortgage-backed products. And obviously, we saw this in the subprime mortgage crisis, where again, what they created was collateral debt obligations, where they bundled good mortgages and bad mortgages, for want of a better word, and sold them to, let's say, investors as a way of allowing them to participate in the mortgage market indirectly. So again, this creates opportunity for the same thing to happen, albeit that the products are not trash, right? In theory, they're not so risky. So what I'm basically saying is that anybody with assets is also in a position where they can become even wealthier relative to those with less assets, because ultimately the asset base is not being impacted by the lack of unaffordability, because the government is stepping in and essentially propping up house prices by allowing more lending and actually encouraging more lending. So for me, I look at the situation quite cautiously, and I think we need to see how this plays out. Um, because as I say, does it address the wider wealth inequality? Maybe it does, maybe it doesn't, right? Um, because if houses aren't more affordable, it just means people are just in more debt, which basically means the level of disposable income they have for other things is also potentially diminished because salaries aren't increasing in line with this, right? Which is why we're introducing, I think they're now going to be allowing 4.5 times salary in some cases, as opposed to 4 or 3. So I think to me that's what it kind of indicates. There's still an issue of affordability. and there's still an issue of essentially what I want to call asset hoarding, right? Because if you have a situation where you have a very wealthy demographic and they're extremely wealthy, what you will find is that they will just buy more and more and more assets, right? And in a situation like that, they don't need to work anymore. They just have a lot of assets. So does this help that, or is this a symptom of that scenario? And my suspicion is it's a symptom of that scenario where you have a lot of people with a lot of assets. There's people that can't access those assets, so therefore they need to borrow more as a means to obtaining those assets, i.e., your home. Now, the other thing I would have liked to have seen is some reform around the rental market. And the reason I say this is because right now there's a huge pressure on home ownership, even for people that don't necessarily feel like they want to buy a home. You know, because it feels like it's the only stable way. It's the only way of basically getting security around where you live. And I can imagine many landlords wanting to punch me in the face for saying that. But my own feeling, objectively speaking, is that if you create an environment where the rental market is stable and it is a genuine viable alternative to a mortgage, then I think what you're going to find is that there will be more investment in other things because people will think to themselves, okay, well, owning a home isn't the only way I must build wealth. I can build wealth through other means. And one of the things that the chancellor talked about was a sort of long-term investment ISA opportunity or product. And again, that will be more attractive if you're not worried about the fact that you're renting and you're desperate to get on the housing ladder because you feel like you have no choice. So I think for me, that would have been helpful alongside helping people get on the housing ladder, essentially. So that was my feeling overall around what was said. Now, the other thing she mentioned, which I just sort of touched on here, was around ISAs and confirming, for now at least, there was not going to be any changes to the allowances, i.e., you can continue to put up to 20,000 in stocks or cash. And I think that's a good thing because I don't think you should almost force people to invest when it just may not be suitable for them for all sorts of reasons. They just may not feel confident doing it. It may cause anxiety seeing the price go up or down, especially as they're getting closer to retirement age. And I think for me, in order to build that confidence in people, you need to either incentivize it in some way or you need to educate people. Um, and that has to happen at schools, and that has to happen, just generally, really. Um, but I don't think it makes sense, and I think it's a bit naive to say, okay, well, which is one of the things they're talking about, is have banks just raise the possibility with people when they're talking about savings, because I don't think if you lack the education, just simply being aware of the fact that there's shares you can invest in is not going to make you, in my mind, more inclined to invest in shares. And also, if you're somebody that wants to see guaranteed returns, especially in the short term, then again, shares and stocks are not attractive. What you're going to look at is premium bonds. You're going to look at gilts, for example. So again, the digitalized gilts that they were talking about. You're going to look at cash, just savings accounts, um, corporate bonds. That's what you're going to be looking at if you want a guaranteed returns. And I know there are sort of cash products in the event that they were to lower the cash allowance. That would also give these returns. But basically, you're creating an educational barrier, in my view, and you're just making it harder for people to do the same thing. And I don't think that's a good thing. I don't think allowing people to grow their wealth should be difficult. I think it should be accessible. I think it should be as easy as possible. So for now, it's encouraging that change hasn't happened. But what I would also note is that if you are lowering the collateral requirements for banks, then it does give room for the chancellor to do this in the future, i.e., lower the ISA allowance in the future. Because one of the things I'd been hearing um, was that banks had been lobbying against this as well, because their fear was that there'd be less deposits, and that would obviously impact how much they could lend out. So, as I say, the chancellor is now lowering the collateral requirements on banks. So, therefore, that kind of removes that problem. It removes that objection the banking industry may have had. So, as I say, it just opens this up for future consideration. But as I say, my own feeling ultimately around this is that it's a very marginal gain. It doesn't is in and itself, it's not going to solve the deficit problem. It's not going to mean that suddenly the government has sufficient tax receipts. So I think the government is still going to have to consider other forms of tax raises in order to deal with the deficit and meet its day-to-day spending requirements, for example. So I think my overall feeling around this speech, and it may have been the audience the chancellor was speaking to that was sort of the way she was positioning this. It did feel as though it continued to focus on the financial sector, and I think many governments and chancellors do this, and I think for me it's a bit of a shame really, because we've seen in the past what happens when you place your eggs in the financial sector basket, um, where where there are huge losses, there's huge crises. Um, Basically, they just have to get bailed out because the economy is just basically so dependent on that sector. But then when there are profits, they remain privatized. And I think for me, that is something that will continue if we can, we carry on, you know, placing all our faith, I suppose, our economic faith in the financial sector. And I'm not saying we shouldn't do so. I just think it needs to be balanced with investing in other sectors as well. Because it almost feels like it's a trickle down ideology around if the financial sector does well, every other sector will just benefit indirectly. And I think for me, it's a flawed ideology. And I've never, as a matter of principle, accepted or believed in a trickle down type of economy. And the other thing I would say is that, certainly when I think about Europe and the UK, is that, these are countries, these are regions that have a rich history in the creative arts, in theaters, I'm thinking about the ballet, dance, music, engineering, the sciences, the education sector in general. Again, so you think about the private education sector in these regions. And these are things that, again, that could benefit from investment, direct investment from the government as well. And I'm not saying they're not doing these things, but I wish these things were acknowledged more in conversations or presentations like this that chancellors give, because whenever they talk about the UK doing well, they tend to talk about the finance sector doing well. But actually, there's other sectors that are world leaders, not just the finance sector, or could be, right? And I feel like the governments don't really acknowledge that. And again, I wish there was more acknowledgement of those things. So yeah, so those are my overall thoughts around the presentation. Um, Let me know what your thoughts are. As I said, check it out for yourself. I think it's always best to watch these things for yourself and form your own view. But until next time, have a good one. Peace.